So you guys are looking to be a scalper and you're looking to trade the NASDAQ 100. First things first, my name is D. Anthony with Evolution Traders. In this video, I'm going to go over my 20 SMA strategy, but on a 2-minute time frame. Now, what are some of the benefits and what are some of the, the cons of playing the 2-minute time frame? So here are some of the benefits. If you are into more of a fast-paced trading style where you find yourself getting anxious, you find yourself not being able to sit patient and wait for setups, and you're always looking to constantly get into things, it's not necessarily a bad thing. Our brains are all different. We all work in a different manner and fashion. Now, I'm not saying to pull up a 2-second chart, but again, a 2-minute chart is okay. So if you find yourself, finding it difficult to kind of sit through and wait, 30 minutes or wait an hour, or wait 2 hours for a potential setup, and you kind of want that faster pace, or maybe even, let's say you work a 9 to 5 and you only have limited trading time to dedicate to the screens, maybe you need to find smaller time frames. Maybe you're into trading a little bit bigger position sizing and you don't want to give up so much risk, right? So you don't maybe want to risk 40 points on a potential stop loss or 30 points on a potential stop loss. Maybe you're just looking to make 5 points here. Maybe you're looking to make 6 points, 7 points. Those are the potential, benefits. What are some of the downside risks of trading in 2-minute time frame? Well, when you run into a choppy environment, which again, every day is not trending. There's a lot of days throughout the month that markets tend to chop around a lot. You're going to find yourself getting faked out a lot. Okay. But if you have a trade plan where you have a daily loss limit, let's say, you put a hard number on X amount of dollars that you're willing to lose for the day, and you can control yourself to not overtrade and have FOMO and just come back the next day and do it all over again, it's really not that big of a deal. But a lot of times I'll see traders trade to smaller time frames and then they get caught up and they win, a handful of trades. They give everything back on one trade, then they overtrade, then they lose their account. Don't do that. If you're the type of person that does that, then you want to go for a bigger, larger time frame level with bigger levels in play. But with that being said, what we're going to look at here is I want to show you some of the benefits, right, of this 20 SMA on a 2-minute time frame. So notice here, as the market's getting ready to open, we have a 12-point range. Now, this is not a big range whatsoever. On my 20 SMA plays, I do one thing, okay? If the reason why candle, which is a candle that closes over under the 20 SMA, if the reason why candle gets taken out, right, and it gets closed above or below, depending on long or short, then I exit. In this particular situation, we wick above it, and you have to imagine during that one period of time, during this 2-minute candle, it looked like candle was going to close over it and then kind of came back down. How many times have you been inside of a trade where you're short? Let's say, use this trade for example, you're short, price starts bouncing, it starts coming up against you, it hits your stop loss, and then you see the trade continue to go in the favor that you were in, and next thing you know, it causes you just to rip out all your hair and go back and forth, back and forth. So sometimes you will give up a little bit more, right? But again, I always like to try to combat that with play the amount of contracts that you're willing to lose, right? So if we're willing to risk 12 points on this potential setup and I trade, let's say 2 micro contracts, the most I'm going to lose is $24 a contract. I'm going to lose $50 on this entire trade. Now, if it goes up a little bit more than 12 points and I lose 15, 16, 17 points, sure, I might lose a little bit more, but that's okay, right? That's why I'm controlling my risk with the amount of contracts that I'm trading. What you're looking for as far as a take profit is a 1-to-1 or close to it, right? So how I do that is if we're looking for a 12-point range, and that's the stop loss that we're going to use over the reason why candle, we're looking for 2 things. We're looking for 6 points on a quick scalp, or we're looking for 12 points. There is no ifs, ands, or buts in between. You get your 6 points, you get out. You get your 12 points, you get out, regardless if it goes down to 40, 50, 60 points. These setups are going to give you so many setups throughout the week that you don't really need to catch one trade for 100 points. You can piece together 100, 200 points over the course of the week, taking 10 points, 5 points, 15 points, 20 points at a time. Let's go through our next setup. Our next setup happens here. It's a 28-point range candle. So again, this is a lot larger range here, even on a 2-minute time frame. But let's say we're giving up 30 points here. 1 micro contract is going to be a $60 loss. 2 micro contracts is $120. We're going to use the same example and say that we're going to trade 2 micro contracts. What are we looking for? Either A, we're looking for 28 points, or B, we're going to cut this range in half and we're going to say that if we get close to 14, 15 points, we're going to get in and we're going to get out. After you get into this trade, it does pull back and it does put you into drawdown. This is one thing, right? This is one thing that traders, this is your stop loss, that's your entry. This candle here is one thing that traders are going to need to get very, very comfortable with. You're going to need to be comfortable with being uncomfortable. And that means that a lot of the time, 60-70% of the times that you're in a trade or you take a trade, you're going to be in drawdown at some point in time. The drawdown should never affect your emotions. It should never make you mad. And if it does, you're probably sized too big. If you are trading one micro contract and let's say you're down 40 or 50 bucks on one contract and you're upset, we got to think about another business to get into, okay? Because there's a cost to doing business. There's a cost to trading, okay? We can't take trades and expect to put no risk on the table and just to, pocket large sums of money. It's just not going to happen. This is a financial marketplace where things can get, very violent very, very quickly. With that being said, we're, again, if it's a 28 point, 30 point range, we're looking for either A, cut that range in half, 14, 15 points to take profit, or we're looking for that 20 to 30 point, 25 to 30 points. And you would have gotten it on this pop here. Okay. So that should be 2 for 2s on the winner side. Now we're going to get another setup here. You'll notice we close right below this 20 period moving average and the range is 17, 18 points. So once again, what is your stop loss, guys? Your stop loss is going to be close to 18 points. Again, do the math. We're going to use the same example. We're going to trade 2 micro contracts. If we lose, we're going to lose around 40 bucks. Okay. Now, on the upside, if we win, we're going to win about 40 bucks, right? Or you're going to win maybe about $25. But again, remember, these are scalps, okay? 20 to $40 here, $20 to $40 here, $20 to $40 here. Guys, you're making $150, $200 a day. Now, again, the math is not perfect, but you kind of get what I'm saying. If you really want me to go through, if you take 12 points on this trade and you play 2 micro contracts, you're looking at around a $40 to $50 win here. If you take 28 points here on this contract, or hell, even 20 points here, you're looking at around another $50 to $60 here. So you should be up close to $100 here. And then if you take another 17 points here, let's say you take profits a little early, and let's say you take 12 or 15 points, you're going to make another 30 to 40 bucks here. So potentially, you're in the ballpark on these 3 particular trades between $100 and $200, depending on the amount of contracts that you're trading. And this is all done within the first 2 hours of the market. I'm a big advocate of trading, maybe 30 minutes before the market opens to around New York lunch hour. Now, mind you, we have Fed days like today where the market absolutely explodes, but it's not something that I really like to trade, right? Because there's enough pie out there that we can make money in the first hour to 2 hours, even 3 hours of the market. We don't need to sit here for 9, 10 hours all day, all night, pre-market, London, Asian, New York session to try to make money, right? So again, if you're someone who finds that you maybe want to take less risk and more potential scalps for less money, but less stress, try the 2-minute time frame. Now, the disclaimer is this: when you get into a day where you take one trade, it's a loser. You take the next trade, it's a loser. You take the next trade, it's a break-even trade, and all we're doing is barcoding, meaning going back and forth over the 20 SMA. That, my friends, is a trending range day where you need to pull the plug and wait for better market environments, okay? Do not sit there and continue to chop yourself up by death of 1,000 paper cuts. Please stop yourself out as soon as you realize that we are in a range bound trading day where setups are confirming, but they're not working. Hope that makes sense. I'll see you guys all on the inside.